This is a simple 15-minute NASDAQ strategy that you can use in order to trade better, pass a prop firm challenge, or just to practice being a consistent trader. My name is Andre and welcome back to my YouTube channel. And today we're going to look at an awesome but easy to learn a NASDAQ strategy, how to trade NASDAQ. I'm pretty sure you can do this on multiple indices, but let's just look at NASDAQ because this is the pair that I focus on the most. Okay, so we're going to look at a few things. It's going to be very simple to remember, but let's write it down so that you guys can also write it down. So number one, we are going to look at identifying the highs and lows during London session. Okay, so let's just drag this over here, spell it correctly maybe. Okay, so we're going to look at identifying the highs and lows during the London session in the morning. So we'll get to that right now. What does in the morning mean? Then number two is we're going to look for a break of that high or low in the New York session. So we're going to basically wait for it to break that high or break that low during, just before, maybe during or just after the New York session. So you will need to watch your charts during that 1 or 2 hour sessions, maybe like an hour before New York until an hour after New York session. And then we're going to identify the order block / fair value gap. Okay, guys, so that's it. If you want to write that down, you can do it. But that's what you need to do. You need to identify the highs and the lows during the London session. We're going to look for a break of that high or low in the New York session. And then we're going to identify after that break the order block or the fair value gap. So this is a nice way to trade that you don't have to watch the charts the whole day. This is like for those type of people. I want to make a trade. I want to have my 2-3%. I want to go on with my life. I have a job. I have this. I have that. I don't want to watch the charts all day. This is perfect for you. Also perfect to pass prop firm challenges and things like that because you can have such a nice risk to reward ratio with this trading strategy or trading style. Okay, so we're going to look at Friday, what happened on Friday. So when we look at identifying the highs and lows, so South African time, the London session we're looking for is from 9 o'clock in the morning until 1 o'clock in the afternoon. So we're going to look for that morning session's highs and lows. Obviously, the London session goes on after that, but we're only looking for the highs and lows during the London during the London morning session. Okay, so here we can see 9 o'clock start. So that is going to be our lowest point on that London session. As you can see, there is no other lower points between 9 and 1. This is 2:15, so that doesn't count. So that's going to be our low, and our high is going to be here at 11:15. So I've made these two red lines to indicate to you our highs and lows. So now what happened was at 4:15, which was 15 minutes before New York Open. So South African time, New York Open is 4:30, but go make sure what time that is in your country. But in South African time, New York is 4:30, so 16:30. It broke out of this London high session. So now what we do is after it broke out here, we're going to identify the order block and the fair value gap. So these two red candles will be my order block, and this over here will be my fair value gap. Let's just make that another color. Okay, so now you will see there is the perfect setup for that buy trade over there. Once it hits into this fair value gap and going close into this order block, that is where you will place your trade. There's multiple ways to risk manage this trade, and I really suggest that you need to go look into the best method for you. But what I would do is I would mostly enter onto that order block's top end over there. I would place my stop loss just below that order block over there, and I would make that my risk to reward ratio is like 3-1 or 4-1 For example, there you can have your 3-to-1 risk to reward just like that. But you can do it in multiple ways. You can do it with a risk to reward ratio. You can do it with a fib. So you take it from the low to the high over there. And you can say, I want to take my TP1 over there on this blue line. I want to take my TP1, my TP2 on this second TP line. For those of you asking for my fib settings, here you go. You can quickly pause the video over here and you can copy this and then use it for yourself. So there you go over there. So there's multiple ways to do it. I like the Fibonacci because I like taking my TP1s here on this blue line and then maybe sometimes leaving another trade for TP2, but this will probably hit this TP3 line over here as well. So that is exactly how you would trade using this strategy. So let's quickly move on to the next one, which was more of a sell opportunity. So here you can see the highs and the lows again of London. This one was 10 o'clock. This one was 10:30. Here you can see after 1 o'clock, we don't use that one anymore because it's after 1. So what this one indicates is, so this is a perfect example of why you should wait around New York session. Because before New York session, it came back into this London session over here. It broke out at the bottom during the New York open candle. And that's when we will go into this and indicate our order block, which will be this green candle over here and our fair value gap, which will be that area over there. Once again, I would probably enter on that order block over there, which would be around there. Stop loss above that order block candle. And then my TP1 can be a 3-to-1 risk to reward like that. So for every 1 pip you lose, you make 3 pips, for example. But the Fibonacci just works wonders in this case. So let's quickly fib this one out. I would probably take it from the top to the bottom over there. And there will be your TP1 there, TP2 there. And actually TP3 was hit as well perfectly. So now you can see with the Fibonacci, I would probably prefer the Fibonacci more. But for those of people that like to work with consistent risk to reward ratios, you can do it with that risk to reward tool. Otherwise, you can just adjust your lot sizes. You can go onto a lot size calculator and work out what lot size you will have to drop to have a 3-to-1 risk to reward according to the Fibonacci TPs that you have. So that's another great example of how this strategy worked. Let's quickly look at another one, a little bit more complicated one, and then one that didn't work out at all, because all strategies aren't 100% perfect, and that's something that you guys need to know. You need to work on a strategy that is like 70-80% successful, 60 to 80% successful, because if you work with your risk to reward ratios correctly, you will always have a profitable month then, because you will have a few losing trades, but your winning trades will outperform so much because of that positive risk to reward ratio. But anyway, let's quickly look at this one. So this is an interesting one that I need to show you guys as well, just because of how it played out. So you can see there's a little bit more difficult ones to spot as well. So what happened here was, that was our high, that was our low. Sorry, that was our high there. What happened was NASDAQ moved through here. And this technically counts as a break at New York Open. This big wick through the bottom, that counts as a break to the bottom side. So once it broke through here to the bottom side, we can then identify this green order block over here as our sell order block. So it broke down, came back in here, but this is something that some traders would have been like, wow, is this a sell for me? Yes, no. Yes, it is. The charts aren't always going to be perfectly pretty, so you will need to think and look and practice these kinds of ones as well. So yes, the same trade happened, sell there, stop loss above, all the nice thing, this candle came down, blah, 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 hit our TPs at the bottom here, another perfect trade, but this is just an example that I want to show you guys that not all trades will be perfect. Okay, in terms of like how pretty the candles are, even though it is a perfect trade, you just need to sometimes identify that order block still, even though the candles aren't the prettiest at that moment. Okay, here's an example of one that didn't work out nicely in terms of taking a trade, and that's fine. If you don't take a trade, don't be upset about it. Move on until the next day. You're not always going to hit a trade or find a trade, and that's perfectly fine. NASDAQ's not always going to play out according to what you want, but then this you leave out. A trade that you don't take is, in my eyes, a profitable trade because you're not losing anything, okay? So highs, lows, broke through the bottom, never came back up to retest this order block, which is perfectly fine. You leave it, you go on until the next day. So here you will see a trade that just didn't work out, and that also happens. So just be fine with it and move on till the next day, and don't rush or try and find trades just because you want to trade that day. So guys, I hope you guys found some knowledge into this strategy of mine. We're going to have a live forex seminar in Cape Town in the start of February. I'll leave it in the description if you want to join, so you can meet me there and meet 3 other very good traders as well and learn about our strategies and things. So check it out. Also guys, check out FundedNext if you want to have a nice prop firm, and all my recommended brokers in the description. But I'll check you guys on the next video, and remember to always use the correct risk management when trading. So I'll check you guys in the next one. Cheers.